We are live. Second day in a row that we're doing a live stream. That's a first, I think, for this channel. So welcome everyone. Sit back and relax. We're going to have a look at a couple of worthy things that you should be paying attention. Some AI stuff, stocks to do well in 2024. Apparently, Alibaba is facing a fine after losing an anti-monopoly suit versus JD. Google to settle a $5 billion incognito mode privacy lawsuit. I mean, incognito, we all know what people are doing in incognito mode, but we're going to have a look at all of that in just a bit. I'm going to wait until some more people join the live stream, and then we're going to dive and dig into all of this. Good morning, everyone. Good afternoon, wherever you all are. Happy you're here. What's up? Everything's good here. So yeah, hope you're all having a good morning, good afternoon already. If you're here, hit that thumbs up button. It helps with the YouTube algorithm, apparently. So there is that. Natalie, good morning to you as well. As I said yesterday, if you've got any questions, companies you want me to look into, let me know in the chat. That's why we're doing these live streams as well. On Sunday, it's a more chill live stream, gaming, sports, and just chatting around. So that will be, I believe, 10:30 a.m. Eastern, 10:30 a.m. Eastern on Sunday. Usually that's what I do here. SPY versus QQQ. We're going to have a look at that later on. Remind me. We're going to have a look at that later on. But right now I want to start with this one right here. Let me know if you can actually hear.
Sam Stowe.
No, probably not. How can we make sure that the audio... Let's see. Okay, let's see if that works.
CFRA Research Chief Investment Strategist, a great guy with stats on the market as well. Sam, it is great to see you. I want to start where we were just talking about, what Josh was just talking about. That is this broadening of the rally that we have started to see. Do you think that continues? And does it indeed mean that more gains are coming here into 2024?
Hey, Julie and Josh, good to talk to you two again. Yes, I think that 2024 is going to be a surprisingly good year. Historically, good years follow great years. We've actually seen an improvement in the average price change by 200 basis points, an improvement by 10 percentage points in terms of frequency of advance after a 20+% gain. So that's the first thought. Second thought is this is the election year. First-term administrations, usually they're up about 15.5% on a total return basis, with every one of those years being positive. So again, another positive indication. I think we might, however, be getting a little bit overbought in terms of percent of sub-industries above their 50-day, stocks above their 50-day, the CNN greed fear factor being at extreme greed levels, et cetera. So I think maybe a post all-time high pause, but as Josh said, nothing really to fear because the next decline of 5% or more will probably come about 10% after a continued advance and would not likely lead into a new bear market.
So Sam, maybe some near-term overbought here, but looking ahead, some potential strong tailwinds. I am interested, Sam. After you've seen the rally like this, how does valuation look to you? Does that still look attractive even at these levels?
Well, at 20 times forward 12-month earnings for the S&P 500, it is higher than the long-term average, which is about 17. But I think because investors are anticipating an end to the rate tightening program, expecting to see the first cut, the street is looking for the first quarter. I think that the Fed's going to wait until the second quarter, but still the market tends to advance about 14% in that 11-month period between the last rate hike and the first rate cut. lifting all boats, if you will, in terms of sizes, styles, sectors, and sub-industries.
Are there those that particularly stand out, though, as doing better in that kind of a scenario, Sam?
Yes, well, financials are one of the groups that tend to be outperformers in this Fed pause period. Real estate also does fairly well. And so I think also that taking a look at the groups that has done so well this year, they will likely carry over into 2024. History tells us that following a down year, you want to buy last year's losers because they're the ones that have the most to recover. And that's what we saw in 2023. But following an up year like 2023, you want to let your winners ride. So consumer discretionary, communication services and tech, but also the honorable mention as found in industrials and financials.
Okay, so lots of interesting takes here. No, don't start talking, woman. Thank you. Yeah, lots of interesting takes here. Especially, it reaffirms what we've been saying for quite a while. Fintech sector should, in my opinion, outperform in 2023. It's a sector that has not done very well this year. I've got a video coming up at 9 a.m. So in 20 minutes about fintech stocks. But as rate cuts happen, whenever that will be, I expect it to be in the first half of 2024, you will see fintech companies go up more, REITs, real estate companies, their stock should go up more as well. And then he's right. If you've got winners, let your winners ride. For those of you that have been following this channel for a while, you know that I had NVIDIA in the past. I sold it because I said, oh, it's gone up enough. Nothing bad has happened with the company. Should have let my winners ride. Would have been up another 2-3x or so. But yeah, going to 2024, expect some pullbacks. It's normal. It's healthy to have some pullbacks. With regards to the PE aspect, people say overall the market is overvalued because the PE is too high. In my opinion, right now with AI, with the technology, with the margins that those huge companies have, they deserve a higher PE than what we've seen in the past decades or more because, well, first of all, cost of goods is cheaper than before. You can do way more with less money. Margins are higher. So yes, you deserve a higher multiple. So whether it's 17 or 21 or 22, I mean, get used to that 22 times for PE. I think that's just the new normal right now. With regards to a couple of questions that you've asked, Transmedics, I haven't really looked at those companies, so I can't really share my opinion with that. But let's move over to this one right here.
The New York Times cracking down on OpenAI and Microsoft in a lawsuit yesterday. But could sentiment surrounding the impact of AI chatbots be shifting? In a new note from Evercore ISI, analysts said that investors have begun to view this as a potential growth opportunity, writing, "We believe the most likely outcome is that the Times signs several AI licensing deals over the next few years that are each worth low tens of millions of dollars of revenue per year that largely follows through to AOP here." One of the things that I had found when I went back and did a deeper dive actually into this filing yesterday was what the New York Times was alleging here. They said the defendants, Microsoft, OpenAI here, engaged in wide-scale copying from many sources, but gave the Times content particular emphasis when building their large language models or language learning models, their LLMs, revealing a preference that recognizes the value of those works. And so now, New York Times is essentially just saying on top of that, they want to be able to monetize their work because they've spent so much in the journalism, they've spent so much in making sure that they build up what is more reputable as ranked when it comes to the generative AI and LLM models.
Well, Brad, I go onto the Yahoo Finance platform and I play around with our new compare feature. And you go to New York Times and it's trading as if these deals, these licensing deals that you mentioned that Evercore was talking about, this is a done deal. This is definitely going to happen. The stock has gone through the roof. It's trading about 45 times trailing earnings on a P multiple basis, market cap of over $8 billion. Now, Evercore does bring up this good point, and I think underscores why these deals ultimately need to get done and will likely get done. Evercore noting decreases in search volume presents a risk to New York Times 50 to 100 million average weekly digital audience, presenting a direct risk to digital advertising revenue. Really, it falls, I think, both parties here, big tech and then ultimately the publishers. They have to work together. And you can see that chart there from Evercore really breaking down how much these companies like a New York Times are in fact reliant on search advertising and just search on the internet broadly. Deals have to get done. It will benefit big tech, but also, of course, benefit the publishers that are working really around the clock to put a lot of this absolutely amazing content into the hands of users.
And so it's a question of where else could this kind of raise the tide in revenue for some of the other news publications that are publicly traded right now. You think about one that has leaned fully into generative AI, at least on the publishing side, and BuzzFeed. I mean, this is a stock that's trading below, 27 cents a share right now, and is unfortunately probably on the pathway to some type of delisting notice. But at this point in time, BuzzFeed, News Corp, is what New York Times putting out there so powerful and precedent setting that it could open up or unlock some type of additional revenue for other publications out there as well.
Yeah, I wouldn't be surprised if you start seeing these deals really begin to funnel in the first half of next year.
It's interesting, really, because we've seen so many talks about ChatGPT, BART, stuff like that, taking a lot of information from websites like Reddit, for example. I mean, all those forums there, you probably get so much info. And there was, I think, a revolt, let's call it, of Reddit admins that just didn't want to operate anymore until they get paid or get a fair share of whatever the revenue was. But now with this whole New York Times, publishers, I mean, people paying for information to train their models, it's interesting because the New York Times also, not just the New York Times, plenty of other publishers out there as well, they also take their information from somewhere, right? So how will that work? Because you've seen plenty of articles with posts, from a person on Reddit, a person on X shared this, a person on Facebook. Is that person getting paid as well, or is it just the New York Times? It's funny they said, they work around the clock to write quality content. Well, in recent years, the content has not really been that great. But moving along to this right here, a tweet from Shamat the Spac King. So he wrote 2 days ago on X, the interesting thing about this New York Times OpenAI lawsuit is the counterfactual. If Apple is indeed writing substantial checks to media companies to license their content for training models, the impact of this and other lawsuits against AI companies training on non-public data will be swift and meaningful. A very clever move by Apple if this lawsuit goes the way of New York Times. So we're going to talk about Mark in just a second. I asked, why not just buy media companies at this point? He said, too complicated, low margin, political, non-technical. I disagree, since I think you can get a lot right now. I mean, these media companies aren't worth that much at this point because, well, first of all, the trust isn't there anymore. The value, the quality isn't there. So maybe you can pick up some media companies at very cheap prices. Plus, I mean, Elon bought X, which arguably is the biggest source of information media, whether you like it or not. So yeah, it'll be interesting to see also this whole aspect of Apple paying publishers to be allowed to train their models on the information there. I mean, it can be a tricky slope, right? Because you're paying a publisher, then maybe sometimes you'll say, look, we're paying millions, maybe be a bit more favorable to us for this, maybe be less favorable on that company. We've seen this already today, right? With lobbying, with sponsors, whether it's automakers or I mean, Pfizer, stuff like that. They pay billions, if not millions, billions over the years towards these websites. And obviously they're getting some positive coverage from that as well. So yeah, we'll see what happens, because then when you use those chatbots, maybe you're getting biased answers. It's going to be an interesting development. Anyways, Mark here, Cuban, says, show more, please. Thank you. Put aside news content, think of medical content. Of course, he has to talk about medical because, well, he is the founder here, Mark Cuban, Cost Plus Drug. Anyways, we're going to talk maybe about that a bit later. Think of medical content, think of advanced research work that a firm wants to use exclusively in its own model. High-value IP can't just be taken and used to train everyone's models. Heck, think Elon lets anyone just scrape X and use in their models? I mean, probably not, but to be honest, when the info is out there on websites like Reddit or X, it's free, right? It's free. It's in the public. So yeah, I mean, this is just my opinion. This is still early days, so we'll see. He continues by saying, from each according to their ability, to each according to the training needs of their models and needs. To which Shamat answers here, I agree. The implications are far-reaching and changes the cogs of the AI companies in a big way. I'm generally skeptical that automated scraping is a good defense for copyright violations. I think we can all agree with that. The solution is latency and filters. The New York Times will say they can't scrape anything till X period of time has elapsed. In addition, we will flag in our HTML content you can scrape. Yeah, I mean, there are probably some workarounds. Some tech genius already found out. I mean, it can make sense. You have to wait a day or two. It's like an embargo of information until you can scrape and use that information. Maybe. If you just want general news, have at it. If you want the good stuff, pay up. It becomes a syndication model. Yeah, I mean, it's been years and years that we as consumers have given away our data for free, right? I mean, for free, we're getting maybe a better service because we're giving away our data for free-ish when you accept the terms of services in any other app or website. You know your data is used in one way or another, and nobody's really paying you for that. It's just you get better targeting, you get better experience using the apps or whatnot. I mean, maybe we should get paid. Who knows? The other thing to know is that there will be millions of models. The Times and everyone and anyone with any IP, the value will syndicate their content and or create their own model. Every major medical entity, Cleveland Clinic, Mayo, Stanford, etc., will have to have models for their own doctors, employees, and researchers, as well as outside subscribers. They will want the quality of their models to represent the quality of their brands and to be a draw for patients. Same for any entity with very high cost, high value IP. They're not giving it away, nor will they let anyone else subsume brand equity without substantial payments. I mean, it's true. There is going to be millions and millions of models. It's going to be one hell of a thing. And to be honest, for the majority of people, it's going to be a okay, fine, cool. I mean, it doesn't really change my day-to-day life. So, yeah, remains to be seen what happens with that. The lawsuit will definitely change things. But overall, I think there's still a long way to go with compensations and stuff like that. Next up is another piece, actually, from this user right here on X, Cecilia Ziniti. There is this whole filing, right? New York Times against OpenAI. So you can see from here, first, the complaint clearly lays out the claim of copyright infringement, highlighting the excess of substantial similarity between New York Times article and ChatGPT's output. Key fact, New York Times is the single biggest proprietary data set in Common Crawl used to train GPT. Now I'm going to zoom in just a second. Let's see if you can see this right. Yes. So the most highly weighted data set in GPT-3, Common Crawl, is a copy of the internet made available by an eponymous organization run by wealthy venture capital investors. The domain www.newyorktimes.com is the most highly represented proprietary source and the third overall behind only Wikipedia and a database of US patent documents represented in a filtered English language subset, blah, 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 blah. You can, if I zoom in, there's nothing. It doesn't really make much difference. So you see number one here is patents.com, Google, Wikipedia, and then New York Times. Just behind New York Times, you have LA Times, The Guardian, journals.plus.org, Forbes, Huffington Post, etc. Pretty close one to the other here. So yeah, it's going to be an interesting case study. That's for sure. But again, they are also getting their information from somewhere. So I mean, they can play God how long they want, but if they write in their article, oh, we've got this video from that person, that info from that person should also get paid, in my opinion. Interesting stuff. It's a developing story, so we'll have to follow it up. Obviously, it will have some implications on not just OpenAI, but any other big tech player out there. What else is happening right now in the market? We're going to have a look at the Alibaba in just a bit. Actually, let's jump right into that. So apparently, let's zoom in a bit. So apparently Alibaba faces fine after losing anti-monopoly suit versus JD.com. Right now, the stock doesn't appear to be getting hit that much. So maybe it might be priced in. I mean, the fine is a $140.68 million fine. Not that big of a hit for Alibaba, knowing that they generate billions of dollars each quarter in free cash flow. So Chinese e-commerce giant Alibaba shares were largely flat, while online retailer JD.com has risen by about 1% pre-market on Friday. The High People's Court of Beijing ruled that Alibaba and Tmall Network, let's call it, I don't even know how you pronounce it, Zhejiang, Tmall Technology abused their market dominance and adopted monopolistic practices called choosing one from two, causing JD.com severe damage, JD.com said in a statement on its official WeChat account. This ruling is not only a fair decision for JD's resistance against the choose one out of two monopoly. I believe the second one is probably Tencent, right? I believe. But a landmark moment in upholding market fairness and competition in order through the rule of law. Again, this won't happen in the United States, in my opinion. In China, the fact that the government decides here, oh, this is what's going to happen. I mean, if JD.com offers a better product, better service, then let the people choose. If the people chose Alibaba, then let them choose Alibaba. This is like the US coming after Amazon and saying, oh, look, you cannot be number one anymore. I mean, they're number one for a reason. They're number one because, I mean, it's the best of the best. So, yeah. China. That's usually what happens in a dictatorship. So, yeah, not surprised, but nothing here has impacted both stocks that much. Then, another settlement. Google to settle $5 billion incognito mode privacy lawsuit. The stock is flat-ish. So, in a recent development, Alphabet's Google has reached a preliminary settlement in a class action lawsuit that alleged the tech giant has misled consumers about their privacy protections when using the private browsing incognito mode of its Chrome web browser. I mean, plenty of people are probably stressing out right now. The lawsuit sought at least $5 billion. Settlement terms were not disclosed by the lawyers, said they expected to present a formal settlement for court approval by February 24th, 2024. This is a 4-year-long thing, so they take their time. Google is a step closer to reaching a final settlement with the plaintiffs. Okay. The settlement followed a federal court ruling last week that denied Google's request to exclude substantial evidence. The ruling also dismissed a Google request to exclude evidence related to other litigation and regulations not at issue in this litigation. I mean, incognito mode, it's supposed to be incognito. So $5 billion. I mean, I would like to get paid as well now. The lawsuit from 2020 covered millions of Google users since June 1, 2016, and they wanted a minimum of $5,000 in damages per user for alleged violations of federal wiretapping and California privacy laws. They claim that Google's analytics, cookies, and apps allowed it to track users even in so-called incognito. Yeah, I mean, it's true. I'm pretty sure so many companies have done that, talking about privacy this, privacy that, but let's be honest, there is no real privacy. I mean, even Apple, after their so-called privacy changes, they just wanted more advertising dollars to flow to their wallets and not to the competitors' wallets. So yeah, that's interesting. What else do we have here? So we have more news out of China. This time, Huawei, the copycat company, when it comes to phones and cars. More recently, I mean, I made the joke on X. If it was an Italian company, it would be called Copypasta because of the way the car looked. I'll try and find it. It's here. I mean, look at this. They basically took a Porsche and they transformed it a tiny bit, but that's it. This looks like a Mercedes C or E class from behind, a little bit, the tail lights, but the front, this is stolen from Porsche 100%. But they've been stealing tech for years and years, so I'm not surprised. So Huawei eyes over $98 billion in revenue in 2023 as device business surpasses expectations. So our information and communication technology infrastructure business has remained solid, and results from our device business surpassed expectations. Both our digital power and cloud businesses are growing steadily, and our intelligent automotive solutions have become significantly more competitive. The Chinese tech giant once was in race with Apple and Samsung to be the world's biggest handset maker until US restrictions, of course, starting in 2019, began to curb its access to chip manufacturing tools needed for producing its most advanced models. After years of hard work, we've managed to weather the storm, and now we're pretty much back on track. The expected 700 billion yuan number suggests about 9% year-over-year revenue growth. I mean, they're probably taking a lot of market share in China from Apple, and that's why we'll see Apple numbers not being that great. But that's to be expected. What else? 5D chips, blah, blah, blah. There are some challenges ahead, so geopolitical and economic uncertainties abound, while technology restrictions and trade barriers continue to have an impact on the world. No kidding. Speaking on AI, who noted that growing adoption of foundation models will demand an incredible amount of computing power. So we need to build a leading computing backbone to help all industries thrive. I mean, with the sanctions on AI chips from AMD, Intel, NVIDIA, even though there are some ways for them to still deliver and sell to China, it's putting China a bit behind, but I mean, I guess they'll just buy on the secondary market or something. So yeah, we'll see. Interesting stuff. Neo, yeah, probably Neo. It looks similar as well, some way or another. I mean, to be honest, it's the fault of the West. They've allowed China to become this superpower while stealing tech, copying stuff from American companies, from European companies as well. They didn't really care because in the meantime they were printing billions and billions because, well, labor is super cheap there. But now they're maybe waking up a little bit. Might be too late, but we'll see. We'll see. What do we want to have a look at right now? Yeah, Tom Lee was pretty accurate this year with his projections. You can actually see. Yeah, well, a year ago he said the S&P 500 would end 2023 at 4,750, which is within 1% of its current levels. I mean, gotta hand it to the guy. Gotta hand it to him. Cathie Wood, yeah, she had a good year this year. I mean, not surprising after a horrible 2022. Seeing the stocks in the, you can actually see, you can actually look at the Cathie's arc. So in the RK ETF, we've got still Coinbase number 1, Tesla number 2, UiPath number 3. So if you look at the performance of Coinbase, I mean, even Tesla, UiPath, Zoom this year, and Zoom hasn't really done that much, to be honest. But Coinbase is up quite a lot. UiPath is up quite a lot. So yeah, you can DraftKings 13 here. You can see why she has performed quite well this year. If you look at the combined ETFs, Coinbase 1, UiPath number 2, Tesla 3, Square, which is actually Block, number 4. So yeah, it will be interesting to see what happens with her, let's say, long-term positions, because she has some, I mean, ARK has some crazy price target, especially with Zoom. What was it? $1,500 price target or something like that. Something pretty crazy. So yeah, we'll see. I wish her good luck. They have some good picks. Of course, their picks are not really working out on a 1 or 2 year projections. It takes a while for it to work out. So we'll see. Does this load? Yes. Okay. So Magnificent 7 stocks had a huge 2023. All are in prime position heading into 2024. Now, with regards to that, I forgot the name of this guy on X. He posted a good picture. So the first half or so of 2023, they really pushed the market higher and higher and higher. But actually, in the last couple of months, they remained flat-ish. Let's see. Or we have to zoom in a bit. Yes. Yeah, so NVIDIA stock and Meta platform are the S&P 500 top performers in 2023, with Tesla and Amazon stock among the 20 best. But these mega caps could be primed for further gains. NVIDIA and Microsoft are the leaders of the AI boom, with Meta, Google, and Amazon also making high-profile artificial intelligence moves. Even Tesla claims AI intentions. I mean, what does that mean? Even Tesla? I mean, it's been years and years of that, but okay. Apple has been relatively quiet about its AI future. It's true, very, very quiet. Even during the earnings calls, they barely mentioned AI. But then again, they have been lacking in innovation in the last couple of years, besides the chip making, fine, M1, M2, whatever. But yeah, we'll see. We'll see what happens with maybe Siri 2.0 will come out. I don't know. Or the Vision Pro might be extremely good, even though it costs a couple of organs. But we'll see. Google stock, Apple, and Amazon are in buy areas. Microsoft, I mean, we've looked at this yesterday. Someone asked to compare the Magnificent 7, how cheap they are, how expensive they are. We have noted that Google, Meta, and NVIDIA are cheaper than the other. Google has higher growth rates as well. So yeah, we'll see what happens next year, election year. So advertising spending, political campaigns, stuff like that should help companies like Google and Meta with regards to advertising. So yeah, take that into consideration. If we look at the performance here, so Apple is up 49% this year, Microsoft 56.5%, Alphabet 58.9%, Amazon 82.6%, Nvidia 238.9%, Meta Platform 197.8%, Tesla 105.5%. S&P 500 is up 24.6%. So if you're holding one of those companies, probably most of you are holding a lot of those companies, you've outperformed quite well this year. So Amazon, why is Amazon a pick here? Well, it's my pick as well, but let's see what they're saying. Amazon's stock ran up to start the year, consolidating for a few months. As you can, this is what I mentioned basically. Goes up, went from 100 to, what was it here? 140, went back down a bit to 120, and then went back up. So basically flat-ish, up 10% or so in the last couple of months. First half was the big push for the big guys. The e-commerce and cloud computing giant ran okay, then sold off, fine. Shares traded around 145.8, consolidation buy point from mid-November to mid-December before moving into okay, which is this area right here. Okay. Yeah, and this is the big story for Amazon. This is my thesis for next year. The earnings, free cash flow, profitability will continue to go up much faster than sales in the next coming quarters and years as well. As for Apple, I mean, as you can see, it has been basically flat since July. Of course, it went down, but we're now at the same price we were back then. As for Google, this same story here. You can see push first half of the year, then remained around the same area for the second half of 2023. As for Meta, that has continued to go up throughout the year. Despite having some pullbacks here and there, it always made some higher highs. With regards to Microsoft, we've had a top here back in July, then a bottom September, end of September, but then we've got a big push here towards the end of the year. As for Nvidia, here it has been very, very clear. I got a lot of pushback when I said that Nvidia, if you don't have a position, I mean, I believe my video came pretty close to this area right here. The upside right now is much smaller than a lot of other companies. And of course, sometimes I make mistakes, sometimes I'm right. This is, again, a very, very short-term time frame, but we haven't really moved that much. I think, I mean, with that, we haven't moved at all since then. And lots of other stocks have moved on the upside. Again, Nvidia, great company. I don't think you should sell if you have a position. But if you are looking into buying Nvidia, despite what we've seen with valuation, again, with regards to upside, you want to have a higher and higher upside. There are probably some better options out there. That's just my opinion. But here again, big push first half of the year, flat, nothing, second half of the year. As for Tesla, same thing here, actually even worse. Big push first half of the year, actually down second half. Of course, Tesla dealing car industry, automotive, high interest rates, the whole sector took a hit. Energy side of things doing quite well. I do think that in 2024, Tesla should outperform the other players out there. But remains to be seen what happens. Ramping up of Cybertruck, launch of Highland in 2024. We'll see. Of course, do share your opinion in the comments. If you have any questions, I'll answer the Celsius question in just a second. Let me just see if I can find that. I can't find it. Okay, never mind. So Celsius is not in my portfolio currently. It's on my watch list. It's what I said also in the in my last video. This is Celsius basically right now, the state of the stock in the company. Great company, tremendous growth in the last couple of years. I mean, if you look at the 10-year chart, it's a joke. It's up 39,000% or so, which is pretty insane. But yeah, it's on my watch list. Year to date, it's up close to 60%. Has a market cap of 12.85 billion, forward PE 65.3 times. This is, by the way, on Coifin. Link is down in the description for 20% off, 30% off Seeking Alpha if you want to try it out as well. There is a free trial available for the New Year's. With regards to Celsius, we can look at the valuation metrics. It is much cheaper than its 5-year mean. Why is that? Well, because the company is just growing top and bottom line extremely fast, becoming more and more popular amongst the energy drinks. I know some people will say, oh, you cannot compare it to Red Bull and Monster, different things, healthier, stuff like that. The company itself compares it to Red Bull and Monster, so we have to compare it as well. It's doing quite well on Amazon as well, so it's taking some market share. Plus, it's also attractive to the female energy drinkers, which I don't think Red Bull and Monster really appeal to the female audience that much. But Celsius is doing a great job. Plus, you have international expansion going to happen probably in 24, 25. That should help with year-over-year comparisons, because this year has been a great year for them. And so year-over-year comparisons can be sometimes tricky when you have a great year, unless you expand internationally, and you'll probably get some tailwinds from that. So yeah, Celsius is on my watch list, not in my portfolio just yet. How would you rate Palo Alto? I want to have more exposure on cybersecurity, but it was, yeah, Palo Alto, CrowdStrike, these types of companies have been indeed, what's the ticker? Yeah, okay. They have been expensive. As you can see, it's now actually higher than the 5-year mean when it comes to PE, EV to EBITDA, price to sales, even price to free cash flow. So yeah, it's expensive. It's expensive. Year to date, it's up 111%. If you look at, we looked at Fortinet yesterday. Fortinet much cheaper, right? On all metrics. PE, EV to EBITDA, price to sales, price to free cash flow as well. Fortinet, cybersecurity exposure, much cheaper. But yeah, I mean, if we look at the growth rates for Palo Alto Network, fiscal year 2024, nice there. Top line, 18.6% growth year over year. Bottom line, EPS here, 24. Fiscal year 2025, another 18.3% growth year over year for sales. Another 16% growth for EPS. Fiscal year 2026, same thing basically as fiscal year 2024. So you've got definitely some growth at top and bottom line. So maybe that's why it deserves some premium. If you want to look at CrowdStrike growing much faster, has also a higher forward PE, but the growth rates are different there. And Fortinet, you can see this year, nice growth top and bottom line. Next year, a bit lower. 2025 should reaccelerate, but that's also why you get a lower valuation here. Growing a bit slower, hasn't really adapted to the whole cloud thing just yet. So we'll see. Do you consider New Holdings as a competitor for Melli or vice versa? I have both companies and see much. I also have both companies, by the way. I also have both companies. I think the market is big enough for both of them. Plus, New is more fintech focused. Melli is fintech, e-commerce, logistics. So that's the big difference here. But again, Latin America, the economy there, the countries are expected to grow quite fast. They're already, when it comes to fintech, you will be surprised how advanced the markets in Brazil are, for example, the fintech markets. So yeah, competitors, maybe Mercado Pago, New Holdings, but I mean, they are What's the population? Let's see. Population LATAM. Right now, 667 million people. So I think there is enough space for two big players. And of course, you have Stonko and some other players there as well. By the way, the video is live. FinTech Stocks Part 1. It's live on the channel. We talk about Stonko, Nu, PayPal, and Affirm actually in this part. Second part will be SoFi, Block, Adyen, and Robinhood. We've got 10 minutes until the markets open. Right now, we are, again, same as yesterday, flat-ish. So yeah. On a more political thing, I see here that the US is really turning into a type of Russia. What the heck is this? Maine and Colorado bar Trump from presidential primary ballots. Okay. So 2024 is going to be one hell of an interesting year for sure. But it's pretty sad to see. Race to the top. Musk leads world's richest to $1.5 trillion wealth gain in 2023. Wow, that must trigger so many people. Musk is up 232 billion. Bernard Arnault 178 billion. Who else is there? I think Jeff Bezos is around that number as well. Bill Gates 140. Steve Ballmer, it's actually incredible. This guy has not been CEO of Microsoft already for more than a decade, but he's still in the top. He's still at the top. That's really something else. I mean, good for him. Just enjoy life, man. Why not? My pleasure. We're going to try and do this more and more. I think it's valuable. You can also ask plenty of questions, and I'll try and answer them in a way that is simple and understandable. Can you add the local to that list of fintech stock? Let me write that down. The local. Okay, it's noted. It's noted. It's going to feature in the next video then. What else do we have here? Maybe this can be an interesting thing. New home sales. If I can share this.
Let's continue the conversation. New home sales took a steep drop in November, falling over 12% from October. Let's continue the conversation. New home sales took a steep drop in November, falling over 12% from October as affordability continues to challenge consumers. But as mortgage rates continue to fall, is recovery on the horizon for the housing market? For much more and that question, our next guest predicting just that, calling for a supply-demand dynamic shift. Meredith Whitney, who is the Meredith Whitney LLC founder, joins us now. Meredith, thanks so much for taking the time here this morning. Let's begin there. What is really going to be the catalyst for the shift? Is it rates alone, and does that do the job?
You've got two major demographic shifts going on within the country. And I think your prior guest was great, super cool and super smart. I would break this down regionally because I think that's very important. So first of all, the U.S. economy is remapping itself regionally, and it has been since the great financial crisis. So you see more growth in areas like Texas and Florida, Utah, Colorado, South Carolina, and you see population migration going along the lines of economic opportunity and economic growth. So there's more job creation in those states and less job creation in states like New York, New Jersey, Pennsylvania, Ohio, Illinois. So you've got that trend going. And so you see more housing demand in states like Texas, all those states that I mentioned, and less housing demand in areas where there's less economic opportunity. And then the other major demographic trend you see is the aging of America. So what's called the silver tsunami is 10,000 people a day turning 65. And by 30, the entire baby boomer population or generation will be over 65. So that'll be 21% of the U.S. population. So there'll be more people over 65 than under 18, and that creates that will create a different environment, and will be lasting several years. So the AARP estimates that 51% of people over 50 downsize their home, and people over 50 are 74% of total U.S. homeowners. So if you just take half of that, you've got about 30 million homes that should be coming on the market. And the peak in existing home sales was 2005, when you had around 7 million transactions. So you've got a big sort of pig through the python that will start, I think, later part of 24 and go on for the next several years. So that, I think, is what's going to be reshaping housing in America. And I think that's what will put regional pressure in terms of more and less on home prices.
Meredith, that silver tsunami that you're talking about, can you dive deeper into some of the, what environment does that create? So you have all these homes potentially coming to market. Does that severely weigh on prices? Or do prices eventually start to take off because people are, let's say the millennials, are in there buying these homes potentially a little bit cheaper than they thought?
Well, again, there's going to be more of a price weighting on areas where millennials or new home buyers are not going to be, right? That's where you're going to see the supply demand differential, right? You've got a demand supply imbalance now. There'll be a supply demand imbalance, I think, over the course of the next several years. By 5+ years, beginning, as I said, in the latter part of 2024. So I think that, I think you're going to see, like I said, regional pressures. And for the millennial, or you've got the lowest household formation rate you've had in 160 years. Millennials aren't getting married. They're not buying homes. They're choosing not to buy homes. You have more like a demographic of young men who
Okay, enough talking. She has a good point. And this is something that was bound to happen. If you want housing prices to come down, you just have to start building more and more. Right now, it's no surprise that not a lot of people are buying new homes, because first of all, if you sell your house, you're probably going to sell it at less, unless you live in some lucrative area. You're probably going to sell your house less than what you bought it for a couple of years ago, if it was an investment property or something like that. Someone asked me, do you own any rental properties? No, I do not. Second of all, if you want to buy a house, it's also going to cost you more. Mortgage rates are still high, so it makes you're in a market where the only people that are selling are probably the ones that are forced to sell their house. And so a buyer that has a lot of cash on hand will probably get some good deals. But we should be building more and more to get housing prices down, putting more people into houses, affordable housing as well. So makes sense. Then with regards to lithium, as we move into a world where we need a lot of batteries, I think lithium should be companies that are dealing with lithium, whether it's mining or refining, should be good. I don't know anything about LTHM, so I can't comment on that. But yesterday, someone wrote something about a company that's also dealing with batteries, which is also in California, that has gone up quite a lot in the last couple of days. But lithium should be a good area of investment. I want to switch to this right here, the Tesla robot that attacked an employee. It's it's not funny, but you'll see there is also Mr. Know-it-all that chimes in here.
This is a crazy story, but a couple of years ago at the Tesla manufacturing plant in Austin, there were 3 robots they were working on that are on the assembly line. They disabled 2 of them at a point, but didn't disable the third. Short story, the third one clawed and injured one of the workers who came in and had disabled some of the safety features on the robot. And that robot then clawed the guy, drawing blood. And there are a lot of people who are saying this robot attacked. Elon Musk is furious and says this was user error, it was a mistake and all, but this has now developed a life of its own. And it really does raise a lot of issues of what's going on with these robots and how safe they are. So it is appropriate, I think, to bring in an expert. His name is Dr. John Gibbs. He is a professor who specializes in this at the University of Georgia, and he has a YouTube channel, Dr. Know-It-All, and he is joining us right now. John, welcome to TMZ Live.
Thank you so much for having me. I really appreciate being on with you guys.
So what's the deal here? I mean, Elon's saying it's user error, but how on earth does a robot like this claw and draw blood on somebody?
Right. So I think the problem is that the headline is attack, and it's in all caps. I actually just looked at the original article. And if you're an attorney, so you have to have agency and intent to attack. And as far as we know, there are no robots, and certainly no robots in 2021 that had any agency. So we're looking at something that is an unfortunate accident, not an attack. It would be like if I was working in the kitchen with you and you turned around and I turned around at the same time and we conked heads or something. That's an accident. That's not, nobody has ill will in that case. So it seems like it was an unfortunate accident. It seems like the engineer, and please understand, I'm going off public information here. So I don't have anything, secret or privy to secret information. I'm going off the same articles that you all are reading.
How does a multi-ton robot get in proximity to a human being and actually is capable of physically injuring the person to the point that it draws blood? You would think there'd be every safety mechanism imaginable to assume that doesn't happen.
Right.
Yeah, I've had the privilege of actually touring the Tesla Gigafactory in Texas 3 times now, which is very cool. And let me tell you, they are extremely safe. And there's a picture right there. So you can see that there are, there's like a wireframe cage around anything where a robot is moving. And not only do they have the cage, they have a door, of course, to get into it. And if the door is opened, that disables the robot. If there are light sensors and other types of sensors, including, I believe some places have pressure sensors and all sorts of stuff. So there's layers of security to make sure that a human being cannot enter into a cage while the robot is working. And if the human does enter that territory, the robot will come to a stop instantly. I mean, it's like even if the arm is moving or something, it'll be like, and it just stops. So there are multiple safety systems involved in this. And clearly what happened in this case, well, speculatively, because again, I haven't interviewed the people, so I want to be very careful here. But speculatively, what happened, at least from the evidence we have, is that this engineer was doing some software update or something and disabled these security systems, these fail safes. And that was likely what led to the accident. And again, unfortunate accident, not an attack. So it's very important to be clear about that. And it's unfortunate that the headlines have said attack.
Okay, so that's clear now. So now that we got you, I got to ask you the question I'm obsessed about. So the prelude to it is Tesla has just rolled out a very sophisticated robot. It's 5'11". It has a lot of human features to it, as you can see. And it can do a lot. I mean, it runs, it can, it moves the way humans move. It is—
the digital dexterity is incredible.
It's really amazing. So my question to you is this: is it not just a matter of time that robots become more than just robotic, that they can process information and then react independent of human commands? What I'm getting at is, could robots eventually develop minds of their own?
So yeah, I think that the short answer, of course, is yes. But the question is, how much time is that going to take?
Well, will I be alive is what I want to know.
I think so. You take care of yourself. You'll probably be alive for this. I don't think it's going to take that long. I think it is important, though, with the Tesla bot or Optimus or whatever you want to call this robot, that this one is being developed, and it's a technical term called a cobot, which is a co-worker, right? This is designed not to sit inside of a cage, but to be able to interact with human beings. Like I said, in that kitchen example, you could be working with a robot who's doing a fry cook thing and you're working as a waiter. That's the kind of situation. So you can see this robot is designed very differently than industrial robots. It's got a much more soft things. It's got these pads on the arms to keep it from pinching if you get your hand inside there or something like that. So it's designed in a very different way. As far as the brains are concerned, that's one of the areas where I have to say, seeing the generation 2 of TeslaBot really shows amazingly how far Tesla has come in terms of the hardware. Their big advantage has always been their software, though, and they actually have some amazing software that's going on inside this. Now, it is not, it doesn't have consciousness of what it's doing right now, but I don't know if either of you have ever driven like Tesla with their full self-driving, but it's that sort of sense that the car, if you do full self-driving, the car really does understand what's going on around it. It's pretty remarkable. And they've transplanted that brain out of the car into this robot.
Oh my God. Okay, this honestly blows my mind. We love having you on. John, thank you so much for the time.
I mean, it's funny. Attacked. Yeah, attacked, exactly. Anyways, the markets have opened. We are basically flat. Dow Jones, S&P 500, NASDAQ, all flat, all flat. Let's have a look at the portfolio, the companies that we're following here. Who has made the biggest jump right now? Nobody. Most of them flat-ish. Those in the red, the biggest red is Adian. I believe yesterday was also the biggest one in red. Unity red, HIMS red, but again, down 0 to 1%. I don't really care that much. Anyways, if you've got some questions you want to ask, now is the time. We're now over 1 hour in this live stream, so let me know. Just checking here. Short interest is below 10%. Okay. If you've got some questions, let me know in the comments in the chat. If not, I'm going to send you to watch the new video that I've put out, FinTech Stocks Part 1. If you haven't watched that yet, go and watch the latest video on the channel. Again, if you want to support me, best way to do so, one, hit the like button, subscribe, check out the links below. Seeking Alpha, Coifin, you get 20 to 30% off. Very, very useful. As you can see, we're always using those websites in the videos. So yeah. Thank you all for joining on Sunday. On Sunday, we're going to have, I don't know why I'm lagging like this. Let me test. On Sunday, 10:30 a.m. Eastern, chill sports gaming live stream. You can also ask me whatever you want during that. So I'll see you there. Tomorrow, last Tesla weekly video of 2023. Short recap of what happened throughout this week. So stay tuned for that. If I don't see you anymore, have a happy new year. Hopefully 2024 will be an even better year for us all. Thank you all for joining. See you all in the next one. Bye-bye.